Hello dear traders, my name is Elizaveta Belugina and I'm the head of analytical department at MPS. Very welcome to our weekly Forex webinar where we discuss the outlook for Forex measures, some metals and sometimes other assets. So let's begin the presentation. So today we are talking about the outlook for this week from April 24th to Friday, April 28th. This is our usual agenda. And let's proceed from the beginning and start our talk with the market's positioning. Here it is. Data from CFTC, Commodity Futures Trading Commission. The data was for the week which ended on Tuesday, April 18th. And as usually, I remind you that there is a time lag with this data, but still sometimes these figures are helpful to catch some big Forex trends because the figures represent the positions of large currency speculators. But this week we can't say that there is a definite picture. Here from CFTC figures, we can see that the US dollar long position, net long position for the American currency has stabilized after some fluctuations in the previous weeks. As for other currencies, once again, the biggest net short positions may be seen on the British pound, on Japanese yen, Swiss franc, the euro, and among commodity currencies, Canadian and New Zealand dollar. There weren't any significant changes in the market's positioning. So for now, we can't say that there are definite signals. Maybe after the new week, the picture will somehow change. This stability for now is an indicator that some current trends and ranges in the Forex market should persist. Here I have the chart of the US dollar index, as it is very helpful to analyze the dynamics of the American currency first of all. And as we are trying to create trade ideas for the upcoming week, for this week, we should firstly look at the chart of the US dollar index. I have here daily, but I think that it is a small mistake and that this is a weekly chart of the US dollar index. So don't pay attention to this inscription. So weekly chart, and we see this clear wedge formation at the US dollar index. The index tracks the dynamics of the US currency versus the currencies of America's main trading partners. And we can see that during the last 2 weeks, the US currency was moving to the downside. One moment, I will correct, I think, the inscription here. Yeah. So there was then a gap to the downside in the US dollar index, and currently it is located in the area of 98.88. You can also spot the fact that the currency is trading below the support line, which goes back to the year of 2016, and it is surely a sign of weakness in the US dollar index. We are approaching the monthly lows here, and the next level to watch lies around 98.50, where we find 50-week moving average for the US currency. So there is more scope to the downside. We also see that the next support level to watch is located around 97.60, where we find the 100-week moving average. So the US dollar index may try to break the lower bound of this range unless some substantial bullish drivers materialize. So the main outtake is that we keep an eye on support levels around 98.50, and decline below this level, below the lower border of the wedge, will open the way to the downside. If the US dollar managed to close the gap and return above the support line, which has been broken, then its recovery will likely meet obstacles at 100.65. There is 50-day moving average, and 101, it's 100-day moving averages. I haven't made a print screen of the daily chart, but there the moving averages are horizontal, so we didn't see strong momentum in the US dollar index so far. All in all, the fact that the US dollar index continued its decline during the past week is, I think, a very interesting thing. There weren't many news from America and from other economies. Important things we need to talk about is that Treasury Secretary Steven Mnuchin said that tax reform in the United States will unlikely happen by August. And all in all, we can see that these promises of Donald Trump of massive fiscal stimulus that will revive the US economy and thus help the US dollar now seem very unattainable, and with the Congress not supporting different suggestions of Donald Trump, it might be really difficult for the president's administration to pull through such his ideas. So with these expectations of the tax reform moved further into future, the US dollar is certainly deprived from its important bullish driver, and this is why we see American currency under such pressure. At the same time, Steven Mnuchin rejected the idea that Donald Trump was trying to talk down the strength of the US dollar. According to Mnuchin, no one tries to pull the greenback down with some verbal interventions. But this statement, I think, is not really important. It is just the mere words. The idea that there will be no tax reform soon is more serious, and if we try to balance the positive and negative factors for the US dollar, I think that the negative factors for now seem to prevail. In the coming days, we'll hear from the Fed's member Kashkari on Monday. CB Consumer Conference will be released on Tuesday, and core durable goods orders and unemployment claims will be awaited on Thursday. On Friday, America will release its first estimate of the GDP for the first quarter, and we probably shouldn't expect strong growth figures after the disappointing data on retail sales and consumer prices, which came from the United States in March. There was a huge miss in data, and the odds are that American first quarter won't bring strong economic growth. As a result, the doubts that Donald Trump will manage to achieve his 3% economic growth target in 2017 will likely be strong, and it is certainly not very good for the US dollar. There is another event risk from America. Donald Trump said last week that the Congress will once again vote on repealing Obamacare. Although currently there is no exact information about this vote, I can remind you that earlier the US Congress didn't vote for this suggestion of Donald Trump. Trump was surely disappointed, and this was the sign that he is not very strong and doesn't have support of the American lawmakers. So if this time Donald Trump is successful, this will somehow, I think, improve the market's faith in Donald Trump a bit. But this the possibility of such an event doesn't look very high, in my opinion. In addition, the US lawmakers will also have until Friday to reach a compromise on the new legislation to keep the government funded. And likely they will just pull the deadline in future and reach some temporary agreement. So I don't think that we'll see the shutdown of the US government, but still just this whole situation with the fact that US government is near its borrowing limits also doesn't look particularly favorable. In addition, the recent data from the United States wasn't entirely positive, and some expectations that the Federal Reserve will raise interest rates in June have wavered. The market is no longer sure that this will happen, so we should wait and see. But I personally don't see potential for strong bullish drivers for the US dollar, and this is why the risks will be greater that the American currency will try to test support levels rather than return to resistance. Here are the economic highlights of the week. We have already discussed the economic agenda for the United States, and here we can see some other releases in other nations. All in all, the week will be relatively light, relatively calm. It has started rather violently with the results of the first round of the French presidential election, but other events don't look those important. On Monday, there is the release of German IFO business climate, and actually we have already got this data, and German business is in a rather good mood and has favorable expectations about the economic future of this country. On Tuesday, we will be watching US consumer confidence figures, as I already said, and on Wednesday, there will be Australian CPI, Canada's retail sales. So Wednesday should be a good day to trade commodity currencies. On Thursday, there will be a speech of the Reserve Banks of Australia governor, and Thursday is going to be the most intense day of the week. There will be a meeting and press conference of the Bank of Japan. I don't think that it will make a great movement in the market. We'll also have the European Central Bank's meeting and press conference, and this might be really interesting, and US data as well. And on Friday, there will be several GDP releases from Britain, from Canada, from the US, and we see that the economies start to pull in with their readings for the first quarter. So it's the first information about big information about how the major economies perform in 2017. And of course, to continue our talk, we have to discuss the results of the French election. And if we were to summarize the fact of this event, I would say that one should have used the word relief, improvement in the market sentiment, more risk-on sentiment, say as you like. It means that from Emmanuel Macron, he is an independent centrist candidate, and far-right candidate Marine Le Pen have passed to the second round of the election. The second round will take place on May 7th. And according to opinion polls, if people were to choose between these two persons, they would definitely choose Macron. The recent data, the Snap Ipsos poll, which was released on Sunday, showed that 62% of French population are in favor of Macron, while only 38% will vote for Marine Le Pen in the second round of election. As Macron is a business-friendly and a pro-European candidate, then his projected victory will surely be a very positive factor for the euro. We can say that some risk premium may have lingered in the euro until the legislative election in June. As in June, there will be a French parliamentary election, and to be effective as president, Macron would need a stable parliamentary majority. But still, Brexit is now probably out of question, and all in all, we have a very favorable picture for the euro area. Political risk in the euro area has diminished. The next source of pain may come from Italy for sure, but I think for now investors will get a bit, not a bit probably, but they will get much more calmer about the euro area. So this is for our presentation part, and let's check the markets. Let's check the weekly developments in order to understand what are the interesting levels for entering the market these days. And here on the euro-dollar weekly chart, we can see that there was a reversal from 106 area, and then the single currency opened in the area of 109.20 today. Weekly indicators are quite positive, although we can see that some moving averages are acting as resistance marks. These are 50-week moving average at 108.95, and higher we have 100-week moving average at 109.94, close to the psychologically important level of 1.10. So we are also approaching resistance levels which connect the highs of 2017. And although the euro is in the positive territory, some potential for closing this gap surely exists. Support is located at 108.37. This is 200-week moving average on the daily chart. And well, we can expect that the market players will try to buy the single currency on its pullbacks to the downside. Here I have the weekly pivot indicator, and you can see that its jump on the opening of today's trade has made the single currency open above the second weekly resistance. So now these resistance levels act as support actually, but although we are in favorable territory, probably I wouldn't risk buying the euro at the current levels. Probably I would wait for some pullback to the downside for more attempts to close the gap. um, for the return to levels around 108, but at this point around 108 I would consider some long positions in euro dollar, or if we are trading on the intraday basis, then levels at 108.77 will surely be attractive, with targets around 109.20. Um, the environment generally seems to be favorable for the single currency. We had the favorable results of the French elections first tour. Also, last week the euro area released good and strong flash manufacturing PMIs, and so the fundamental picture has surely improved. Another important event on which traders will focus and which will likely provoke a great deal of volatility is the meeting of the European Central Bank on Thursday. We should remember that after the previous meeting of the European Central Bank, which took place on March 9th, here is this area. Investors increased expectations for the central bank's policy tightening in the foreseeable future, and we saw euro dollar rise from levels around 105 to levels near 109 mark. However, at the end of March, the expectations of the ECB's monetary tightening have evaporated, and traders will likely be very interested to know how Mario Draghi now views the picture for the euro area. If he somehow decides that it is time to send a more hawkish signal, and he may do that because the political risks have significantly diminished, then the odds are that the euro will be able to overcome resistance around 109.20 and get to 110, 111 area, targeting at this point, and probably higher as the euro will leave this consolidation range. If Mario Draghi still doesn't hint at further monetary policy tightening by the European Central Bank, if he decides to wait until the second round of French presidential election is over, then the euro will be able to, the euro in this case will correct to lower levels, and in this case will target levels around 107. Looking at this support, looking at this range of the euro dollar, it is not likely that the pair will get significantly lower than 107 mark. So the main outtake for the euro is that fundamentals have become better, but we will wait until Thursday to see whether the European Central Bank agrees with the view that the Eurozone's economy is now fine to taper monetary stimulus. Dollar franc is trading in the short-term bearish trend, and as we should remember, there is an inverse correlation between euro dollar and dollar franc, and when euro dollar is getting stronger, dollar franc is depreciating. This is the nature of these pairs. Here we have a kind of negative signal from the moving averages. So it might be difficult for the pair to return above one franc per dollar mark, above the parity. So some lower levels around 0.99 may be the next targets. British pound is in a remarkable situation as well. You can see that last week British pound made a great leap to the upside and formed a big bullish candle at the weekly chart. The pound strengthened to its highest this year after the UK Prime Minister Theresa May called for a snap election on June 8th, seeking a personal mandate and parliamentary support to take her through tough Brexit talks. The pound then got stopped by a 50-week moving average, which is located at the level of 1.2845. So far, the British currency failed to get higher. The weekly close was below this level, and we also see the heavy bearish Shimoku cloud, which is keeping the pair under pressure, and this cloud is located at 1.3115. So this is a kind of heavy cloud over the British pound, and it is not easy for the British currency to overcome this mark. We are also at the kind of channel resistance here and this strong moving average on the weekly part. So some retracement is possible. The potential retracement target, if we are talking about the downside, may be located at 1.2625. Here we have the previously resistance of the triangle, and now this represents support. The inability of the British pound to continue its rally to the upside may be explained by the fact that the market's reaction, the rally, may have been a bit exaggerated, and there is still uncertainty over the upcoming elections and whether Theresa May will have her support at this election, and well, even if she wins, what will happen with the United Kingdom, how she will proceed with Brexit. Still, we don't know anything at this point, and this is why the way for the upside for the British pound is surely not easy. This week, global sentiment and will be a driver of the British pound. So far, the market is in the favorable mood after French presidential election, the first round, but we should remember that some risks tied to North Korea and the situation at Korean Peninsula may flare once again, and increase in geopolitical risks will be negative for the pound. So as for the data, here we will also have figures mostly from the United States. And among British data pieces, a GDP release on Friday will be the most important piece. In the absence of more market movers from Britain, we will be looking at data from the US. But all in all, the lack of these economic releases in calendar for this pair is one of the reasons to expect some correction to the downside here. For now, GBPUSD is consolidating around 1.28 mark, as you may see on the daily chart. And also, if we study the pair with the weekly pivot indicator, we should still see that the pair is in the positive weekly territory, that the weekly pivot is located at 1.2742 and is capable, as long as it is above this level, to rise to levels around 1.2970. The next pivot resistance is at 1.30, but we remember the weekly chart, we remember the moving averages here and the Ishimoku obstacle. So I think levels around 1.2550, 1.30 should be levels to fix bullish positions on the British pound if you open these positions above 1.28 mark. But I still feel that the overbought British pound is due for some correction to the downside. Next, we come to the US dollar Japanese yen currency pair. And here we can see that the improvement in the market sentiment has surely made dollar yen increase. It diminished demand for Japanese yen as a safe haven, and as a result the pair managed to stay above the 50-week moving average, which is located at 108.35. We are now trading in the area of 2000-week moving average, which is located at 110.32. We are above the psychological level of 110, and there is a possibility that dollar yen will test levels of resistance around 111.60. Here we should face significant resistance, and although the upside for the pair will likely be capped by 113.13 in the coming days. Here is the daily chart, and we can see that the pair managed to stay above the 200-day moving average. Still, the overall picture doesn't look very impressive for the dollar yen. There are extremely many levels on the upside, which might act as strong resistance levels. So, I would say that this is not my favorite pair to trade this week, although small upside is quite possible, as the market sentiment has turned more positive, and there will be a meeting of the Bank of Japan, a press conference on Thursday. An overwhelming majority of market analysts expect that the central bank will maintain its ultra loose monetary policy, and this will certainly weaken the yen against the US dollar, probably not by much, as no expectations that the Bank of Japan will somehow increase its easing. There will be also household spending and unemployment rate coming on Friday. So here I can repeat, a minor upside is possible in dollar yen, but not very strong, as we have talked about the fact that the US dollar itself fundamentally doesn't look very strong, and despite the improvements in the market's risk sentiment, these weak fundamentals of the US dollar don't allow the currency to gain significant momentum here. And from the news part of things, we will be watching also different statements of Donald Trump. Some positive news about his relations with the Congress may pull the US dollar to 112 area. But if there is once again increase in tensions between the US and North Korea, then likely the pair will return to 200-day moving average, which is located at 108.90. This area, 108.90, is a strong support, as 50% Fibonacci retracement corresponds with 200-day moving average, and this is a very, very strong support. Even from the second attempt, the pair should find it difficult to break lower. But we have to acknowledge these fundamental risks, which don't give the US dollar a significant advantage over Japanese yen here. But still, if we look at the pivot levels, we can see that they show that the pair is in the positive territory, and the third weekly resistance is located around 111. So probably not much scope for the US dollar to strengthen after that as well. Let's have a look at commodity currencies. The Australian dollar is trading on the downside, not really impressive dynamics, although we can see that the 50-week moving average at 0.7515 is guarding the downside. Resistance is located around 0.76 and 0.77, the big figures here. Well, what can we say? That the meeting minutes of the Reserve Bank of Australia showed that the central bank officials are concerned with the lack of improvement in labor market conditions and growth in the housing credit to investors. So that's why the RBA decided not to change its current loose monetary policy settings in upcoming periods. So on the daily chart here, we see a sideways trading, and my best bet is that consolidation between 0.76 and 0.75 will likely continue during most of the upcoming days, as Australian dollar doesn't look pretty strong as well. Surely Australian CPI and the statement of the Reserve Bank of Australia governor will move the pair, and if we get above 0.76, then we will be able to place long positions targeting 0.77 mark. Probably the governor Lowe will say something positive, but I don't think that he will be able and that he will be willing to give Australian dollar a reason to go beyond 0.77. The current situation when the US dollar is not feeling very well, Australian monetary policy authorities wouldn't like to give this pair fuel, as it won't be very good for Australian national economy to have Australian dollar at such expensive levels. And as Australian dollar, US dollar is not going to the downside on its own, as the US dollar is not strengthening, so some moderate commands I think should be expected, and this is my rationale behind expecting the range trading to continue. New Zealand's dollar is trying to test resistance around 0.7030. Here we have significant obstacles. If the pair manage to get past this mark, we will have our focus on 100-day moving average and the 38.2% FIBA retracement at 0.7075, and break above this level will bring us to 0.7113. And here, once again, pay attention to the fact that 200-day moving average corresponds with the 50% Fibonacci retracement, and this means that this resistance will likely be extremely strong for the pair. So here we will just have to take into account the levels, maybe to put some pending orders between these levels in question and buy on the break to the upside with some conservative targets and sell on the pairs decline below support levels to fix profits around probably firstly levels in the area of 0.70 and then 0.6950. We also have gold chart, and in line with our expectations, the precious metal is correcting to the downside after it reached some resistance on the upside. And the improved market's risk sentiment can surely make gold return towards 200-day moving average at 12.55. This is a perfectly reasonable thing to expect here for gold. So I think this can be an interesting bet, especially if we go below the current support at 12.66. So these are my main outtakes from the events of the currency market. And as usually, let's now summarize what we have learned and what we have discussed in order to think about trade ideas for these several days. So first thing is the US dollar, which is now without its significant tax reform driver. So this bullish Trump trade is out of the question. And the US dollar is not feeling very well. It lacks bullish drivers. So some consolidation in general and some specifics in the currency pairs. Euro, on the other hand, has nice fundamentals. But there will be a meeting of the European Central Bank on Thursday, and traders will watch whether the ECB recognizes these improvements in the euro area's risk profile. I would say so. If the ECB is positive, then we look for a break above 109 mark and target levels around 1.11. If the ECB is more dovish, then we'll target 107 mark, but don't think that a more significant retracement to the downside is possible at this point. Of course, the ECB President Mario Draghi is well known for his ability to make the euro move, to talk the market down, but I don't think that the market will put a lot of weight on his statements if he says that the euro is in a bad situation. So I think that the markets will generally have a favorable opinion about the euro, but as we are now trying to close the bullish gap and we face resistance around 109 mark, some retracement to the 108 level and probably 107 looks very possible. For the British pound, after its initial advance last week, now there is a pause, there is a strong resistance at 1.2845 and retracement to 1.2625 is quite possible. This looks to me like the most likely scenario. Dollar yen is certainly recovering. There will be a meeting of the Bank of Japan, but we don't expect much from that. And given the general weakness of the US dollar, the scope of recovery should be limited by levels around 111.60. For Australian dollar, we see most sideways trading between 0.75 and 0.76, but we will be ready to open positions if there is a clear break of 0.76 mark with the target at 0.77. So traders who want to trade Australian dollar should pay attention to Australia's CPI release and to the speech of the RBA's governor. And finally, gold is continuing its correction to the downside, and the retracement back to 1255 looks quite possible at this stage. This is what I wanted to share with you today. I greatly thank you for your attention. Hope that the presentation was useful. If you have any questions, try to contact me, Elizaveta Belugina, the head of analytical department at FBS, and I'll be very happy to make my next presentation next Monday at the same time. Thank you for your attention, and I wish you all the best in your Forex trading.